The broadcast is now starting. All attendees are in listen-only mode.
Okay, everyone, how are we all doing? This is Neil Green again with you on the weekly webinar. Welcome, everyone. Welcome, traders. Welcome to the weekly webinar. Just as you probably know, we've been doing it for every Wednesday. Okay, every Wednesday we have webinars talking about the events of the same week. My name is Neil Green, and I'm here with you. I would like to welcome you guys from Facebook Live joining us today. Just like every week, this time at 3 p.m. GMT time, doing these webinars on the events that are taking place this week. And I just want to do a technical check before I start, guys. Just write me down. You have a chat window, by the way. So if I just want to see that you can hear my voice and see the screen just before I start. Just write me down something that you can hear me and see the screen. You're supposed to see our homepage at ITRADER.com. Just write me down that everything is cool before I start. And all right, great. And so welcome, everyone. I'm very happy to see you here, guys. And this time we're going to talk about the oil inventories that's going to take place today, actually in about 30 minutes. So get ready with your accounts, and let's see how it affects the market, what's going on in the market these days with the oil, and let's make money. Okay, let's start. Okay, so everybody can see the screen, hear my voice, we good? All right, that's great. Again, you guys from Facebook, welcome. Welcome to our webinar, and we're starting. Okay, so this week we talk about oil inventories. Okay, oil inventories. Now, the weekly oil report will be published today at 3:30 p.m. GMT time, which is London time. We're talking about 30 minutes from now, even less, 27 minutes from now. This event is going to take place. The publication has been gaining strength in the past year and a half. Okay, the reason is low oil prices are generating more demand for the inventory report. I'm going to talk about it in just a second. Why? The reason actually is the market participants are concerned that high inventory could keep oil prices down. All right. Now, where do you see it? You can see it on investing.com. You can check it here on Forex Factory. All right. You just go to today on the calendar, and you can see at 3:30 GMT time, we have the crude oil inventories. You see marked in red, which means very important, high volatility expected. And you have the forecast, the previous, and we're going to have the actual number right here, exactly when the event takes place in about 25 minutes. So we expect 1.5 million more oil barrels in the United States firms. Okay, more than last time. Okay, we counted, not we, but after counting how many barrels are in the United States last week, this is by the way, this is a weekly event. So what I'm saying right now, you can use this webinar and this information in order to trade weekly oil inventories in order to make money in the market. And let's start. Okay, so crude oil inventories, all right, 1.5 million more new barrels. This is what expected. Of course, the actual number, if it's going to be higher than that or lower than that, we're going to check it in just a few moments, and let's see how it affects the market. Okay, so market participants are concerned that high inventory could keep oil prices down. All right, why is that? Think about it. If we have more supply, which means more oil than expected, if the number is going to be higher than the forecast, which is 1.5 million, all right, it means we have more oil barrels in the United States than expected. What happens when we have more than something to the price? When the supply is high, usually a price of an asset is going down. If we have more than something, the price is going down. If we have less than expected, usually, right, the price of the asset goes up because we're going to see some high demands. Great. Now, around 100, just for you to understand the numbers, okay, just just like every event, before we start trading, we want to take a look at the bigger picture before we go specific and try to understand what's going on with crude oil in the world right now. So around 100 million barrels are predicted each day. Okay, we're talking about 100 million barrels of oil per day. OPEC, I don't know if you know OPEC, but OPEC is the organization of the oil countries. Okay, we're talking about 14 countries, 14 members that are in OPEC, and they're responsible. You see, OPEC is responsible for around 30 million barrels a day. So the whole world, in the whole world, we have 100 million, and 30% out of the oil export in the world is based is coming from these 14 countries that are members in the OPEC. Okay, OPEC is organization since the 60s, and okay, OPEC members like Iran and Saudi Arabia are suffering from low oil prices. Okay, oil is currently traded, around $54 per barrel. Oil traded above 100 barrel in 2014, and let me show you that. All right, let's go to the MetaTrader. Let's go to the MetaTrader. Hi, MetaTrader. Great. Let's go to CL. CL stands for crude oil. You can find it down here with all the energy assets down. Let's show all. And there you go. All right. CL crude oil. I take it and I put on the chart. As you can see, this is a daily chart of oil, of crude oil, which means that this is a candlestick chart, which means that each candle that you see here represents one day. A red candle means that in this specific day the price of oil went down, and a green that it went up. If I put a monthly chart, which means that each candle represents 1 month, all right, so this candle right here represents March, that started today, February, January, and so on. You can see that the prices at 2008 were around 140, and back in 2014, we're talking about 3 years ago, it was around $100 per barrel. Right? It was around $100 per barrel. Today it's 54.24 right now dollars per barrel. So it's around half a price than what it was 3 years ago. And this is not so good for the OPEC countries, for the oil countries, because they make half money. All right, think about it. If they used to sell an oil barrel, the price was $100 per barrel, and right now it's $55 per barrel. They make half a money, and it's not good for them. So of course, the OPEC countries, these countries that produce oil, we're talking about 30 million barrels a day out of the 100 barrels a day in the world. They want the oil prices, of course, to be as high as they can to make more money. And these low prices of oil, this is the reason why we put a lot of attention to the oil inventory event that is taking place every Wednesday at the same time, usually. Okay, so this is just for you to understand the reason. So as we say, oil is currently traded around 54 a barrel. Oil traded above 100 a barrel in 2014, as I just showed you. OPEC is trying to cut production in order to push down inventories and push up prices. Right? Think about it. If they're going to produce less oil, and people, we need oil. We drive our cars. We fly on airplanes. We need oil. Okay? If the prices of oil, if they're going to produce less, they're going to cut production. These oil countries, Saudi Arabia, Iran, Venezuela, in Dubai, and so on and so on. I'm talking about all the 14 countries. So they want to push, in order to push down inventories, and then the price will go up. As we say, when supplies goes down, demand goes up, price of oil should go up. As long as oil keeps trading low, as it is now, 50, 51, 52, $53 per barrel, the inventory report will continue to generate market volatility. Because think about it, 3 years ago, when the price was around $100 per barrel, okay, at this stage here, these oil countries, they didn't really put a lot of attention on the oil inventories in the United States because they made a lot of money. They made double money than what they're making right now because they used to sell it in a $100 per barrel. Right now, when it's $50, $55 per barrel, they make much less, and this is why this event, this weekly event of the oil inventory, is much more important generates, okay, a very high volatility on oil prices. And for us traders, it's a huge opportunity to try to understand the trend, all right, where the price of oil is going, which we're going to do it today together, and take smart trades. Great. We good so far? Pretty easy, right? Okay. So as long as oil keeps trading low, the inventory report will continue to generate market volatility. Traders use the report in order to take advantage of oil swings after publication. So in about 20 minutes, we're going to have the publication, all right, of the oil prices. And we can use this report in order to take advantage of the volatility. High volatility is great for traders because we can make a lot of money if we understand where the market is going. Okay, so volatility is the thing right now. High volatility because of low prices of oil, we just talked about it, and the oil inventory event makes it more important. Now, last time OPEC cut production was on November 30. Okay, the price jumped more than 10%. Guys, listen, folks, this is a lot. 10% in price of oil is a huge thing. All right. Let me show you what happened. Let's go back to the daily chart of oil. This is a daily chart. This candle right here, you see this huge green candle? Let me zoom in for you. You see this huge green candle? The date here is November 30, okay? This candle represents crude oil prices on November 30. The beginning of the day, the price was 45.20 cents per barrel, and at the end of the day was 49. Okay, so we're talking about in about 2 days, 3 days, we're talking about went all the way up, as you can see here, to 51. We're talking about 10%, 10% in the price of oil. This is huge money. This is huge money we could make here, and we made a lot of money here. And how do we know that? All right. Now, on the last event, this is the last meeting of OPEC, to remind you, the 14 countries that are responsible for 30 million barrels a day out of the 100 barrels a day, 100 million barrels a day in the world. They had a meeting in Vienna. All right. The meeting in Vienna, the thing was that the Iranians wanted the Saudi Arabians to cut production in order for them, the world have decided to take off sanctions of Iran, if you remember that, with the Obama agreement and so on. Right now, Trump is trying to change it, but this is a whole other subject. And what happened is they have made a decision on this meeting to cut production. When they decided to cut production, it means that the supply goes lower, the demand goes higher, people buy oil. When people buy oil, the price of oil goes up, and it went up by 10%. Okay, just for you to know, if you go to the OPEC homepage, right here, this is the OPEC homepage, all right? You can go to, let's go to press room and look for the upcoming event. The next meeting of OPEC will take place on May 25th, all right? So the trades, me and us folks, we take today, we can take it until the next meeting, and then you can trade according to the next meeting on May 25th. And until then, we have every Wednesday this weekly oil inventory event in the United States, all right? So it's going to take place in Vienna, Austria as well on May 25th. This is the upcoming event. The last one, as I showed you, was on November 30th, and I just showed you the reaction of the market went up by 10% in 3 days. Okay, oil is currently trading. How much? Okay, this is a great question, guys. How much money could you make? All right, how much money could you make back then if you would buy? Let's say I'm taking only $10,000. All right, just to show you. Let's take. All right, $10,000, and with a leverage of 50. The price was $45 per barrel. We could take around 11,000 barrels and multiply it by $6 per barrel. The price went up. You could make around $65,000 in 3 days out of 10,000. We're talking about 650% on your money. Okay, this is how volatile it is, and this is how these events are affecting the market. Let's take a look at what's going on right now. Back to the PowerPoint. Now, oil is currently traded sideways channel between $50 to $55 a barrel. All right, showing you. This is, you see, this is a daily chart. Each one represents 1 day. This is today. Right now, the price 54.20. If we put a support level here, Okay, knowing, by the way, in every trade, in every single trade, in every event when we trade, what I'm teaching you right now is this fundamental analysis of the market to understand how the oil inventory affects the market. Now, if we know how to combine this fundamental analysis with the technical analysis, okay, we're professional traders because we know how low or how high, depends on the oil inventory information that we're going to get in 15 minutes, the price of oil might get. Now, putting here a support line at around, even lower than that, at around, you see 51, around $50 per barrel. We have a support line here, and we have a resistance line at around $55 per barrel here. So we have a channel of a sideways trade. Every time the price touches, you see 1, 2, 3, 4, 5, 6 times. When it touches the resistance line at around $55 per barrel, all right, the big money, the investors sell oil, and then the price goes back down. Since we're talking about since the election on December, okay? So I'm sorry, a month after the not the election, but after the price went up after the meeting. Every time it hits around $51 per barrel, the price goes back up. So we have a, you see this channel here, this candle here, great. Now between $50 to $55, this is effect. We're talking about what, 2.5 months. All right, an attempt to break above or below the channel could occur during the publication today. So pay attention today after the oil inventory. We expect, because of the low prices of oil, as I told you, very, very high, the market, the oil is going to be very volatile, okay? So even if the price of the oil, it will go up or it will go down according to the information, we can look at it technically. Just take a look at the chart at the same time and see if it breaks the resistance line at 55 or breaks the support at $50 to $51 per barrel. Okay? Because then, okay, it could go either up to the next resistance line here, which is around 60, was 62 in the past. Let's put it quickly. All right, so the next resistance line, if it breaks the 55, it can go all the way to 62. You see this resistance line here? And if it breaks the support, price of oil can go as low as $42 per barrel. Okay? So pay attention to the event today and put some key levels. Every time before you take a trade, you have to do this technical analysis and put some support and resistance lines to understand how high or how low the price of oil or any asset you trade on, in this event it's oil, according to the event of the oil inventory taking place every Wednesday. As long as the oil prices are low, it's very effective. Great. So an attempt to break above or below the channel could occur during the publication today, as I showed you. Now, traders can use correlation tactics in order to diversify the opportunity today. Okay? If I don't want to put all the eggs in one basket to trade only on oil, I can diversify, which means split the risk, not put all the eggs in one basket and split the risk in order to trade right and correctly with my portfolio. Correlated assets include the ruble, okay? These are currencies, Forex, the ruble, the Canadian dollar, and the Hong Kong dollar, the NOK currencies, okay? These countries are massive, huge export of oil. We're talking about Russia, Canada, and Hong Kong. And usually these currencies work with a very, very hard correlation with the crude oil prices. So if you want to trade not only on oil, you can trade in one of those currencies as well, very correlated. High volatility could create movements that are more technical than fundamental, right? Pay attention to this. Put some support and resistance lines before you trade. And of course, good luck. Okay, where do you find the information? Again, you can go to forexfactoryinvesting.com, whatever you like. You can find it here. We expect 1.5 million barrels more than last week. If it's lower than that, usually the price of oil goes up and the opposite. Pay attention if you don't really know where it goes. Just pay attention in about 10 minutes. Take a look on oil. Okay, put it in 5 minutes on. I would put it, you know what, on a 1 hour chart. Hourly chart. Let's go to oil and put it on 1 hour. Each candle represents 1 hour, and see if it goes up to 55 or it breaks down to around 50 or 51 dollars per barrel after the event. Right? If we're gonna have a breakthrough through the event today, technically, usually you can trade breakthroughs and go the same direction. Remember, always remember, the trend is your friend, and high volatility for us traders is great because it means a lot of money. Okay, you can protect yourself, of course, by putting stop loss orders, okay, and take profit on the other side in order to have an exit point. Questions? Anything you didn't understand you would like me to clarify, to repeat? Let's do some Q&A session. All right, questions and answers, in order for me to try to answer all your questions and see that everything is where we want it. Again, in meanwhile, let me show you daily. We have sideways right now trend between 50 to 55. Oil inventory will create huge opportunity to trade. Look at the trend, look at the reaction. Always, if you don't know exactly what direction to take after the event, after it's published, okay, just take a look at the trend and you can always join the trend. Remember, the trend is your friend. Hug him, all right? And we have the support and resistance line to understand how high or how low the price might get. And if we have a breakthrough, of course, this is even more of a greater opportunity, technically more than fundamental. All right, guys? Okay, so by the way, I would like to thank you very much for the emails you've been sending me during the week. You know, I'm trying to reach all of you, but it's pretty hard trying to answer all your questions. You have your account managers. You can always contact and ask more questions if you have. I'm sure they will love to help you. And by the way, next Wednesday, we're going to be here talking about the NFP, the non-farm payroll, that will take place on next Friday. So you're more than welcome to join us. You guys on Facebook, you can join us on our homepage. It's of course it's for free, and always welcome to join us, open an account, and trade with us if you like money. This is what we're here for. So I would like to thank you very much for participating this time. I'm going to be here every Wednesday. Okay. Thank you very much, you guys from Facebook Live, to join us. Thank you very much, our iTrader traders, for joining me every week, and for the lovely emails that I receive from you. I'm glad that you're making money in the market. This is what we're here for, and we're going to do the best in order to try to help you in any channel. These webinars are for free and will always be. Thank you and have a great one. Bye-bye.